According to the Canada Pension Plan Investment Board (CPPIB), only 12% of the CPP's $714 billion portfolio is invested in Canada, the lowest share recorded in its history, while exposure to U.S. assets has reached 47%, the highest on record. The shift has reignited concerns from policymakers and pension experts about the fund's domestic economic role, geopolitical risks, and long-term mandate. As reported by CBC News, the allocation to Canadian assets has declined steadily from 74% in 2005 to 12% in both 2024 and 2025, while U.S. investments have grown from 12% in 2008 to 47% in 2025. The CPPIB attributes this trend to strong market performance in the U.S. U.S. stocks have gone up, said Michelle Levy, head of public affairs and communications at CPPIB. It's just because we make good investments. But some say the imbalance raises strategic questions. Former senior finance department official Susan Peterson, who helped build the modern Canada pension plan, said, "If Canadians knew out of the $714 billion such a minuscule amount was invested in Canada, I think they would say, whoa, what's wrong with this picture?" As per CBC News, Liberal MP Karina Gould, chair of the House Finance Committee, said she's concerned about the low domestic share and indicated that committee hearings into the CPP's investment strategy could begin in the fall. "It is concerning," she said, noting the need to explore whether the plan could more actively support Canada's economy while still meeting its return objectives. New Democratic Party finance critic Don Davies also called for a mandate review, telling CBC News, "There's no shortage of projects that will strengthen our economy and also give good returns to workers and employers." The issue drew broader attention in March 2024 when Canadian executives signed an open letter to former Finance Minister Chrystia Freeland and provincial counterparts. As reported by CBC News, the letter expressed concern about the decline in Canadian investments by pension funds and its impact on the Canadian economy, calling for reforms to encourage more domestic investment. In response, the federal government appointed former Bank of Canada Governor Stephen Poloz in April 2024 to assess how to stimulate more Canadian opportunities for pension funds. The fall economic statement included proposals to ease investments in Canadian companies, public utilities, airports, and AI infrastructure. However, Daniel Brosseau, co-founder of Let Go Brosseau, remains skeptical. He told CBC News that current proposals will have no effect unless they distinguish between foreign and domestic investments. He proposed taxing foreign income from pension plans to incentivize Canadian deployment. CPP Investments maintains that its focus remains long-term. "We're investing money for people who aren't even born yet," said Leduc.